We are live. Welcome everybody to another episode of Market Buzz. In this one, we're gonna be a little bit longer than expected. In this one, we're gonna be talking about the FOMC and what we saw in markets after the interest rate cuts. What are our expectations? What investments are we analyzing? What investments are we looking for? And we're just gonna have a conversation on here. So feel free to ask any questions in the comments. We're more than happy. We are live, and it's gonna be quick and easy. We're going to try to answer as fast as possible to your questions. Markets are selling off this week a little bit. As you can see, there's a lot of red just behind me. But hopefully, well, actually, you can't see. You cannot see it. They cannot see it. But it's going to be interesting because we have our macro guy, Dimitri's in here, and myself, Nestor Mendoza. Make sure to check out our portfolios down below to get any ideas or potentially copy us if you feel like you believe our thesis and our investment theory. So yeah, welcome Dimitris. How you doing?
I'm good. I'm good. I was just watching the CNBC show, trying to get, like we're watching our portfolios, but you want to get a general idea how the market is feeling, how the pundits are responding to the questions from the people, from the host, and sometimes watching the show on a daily basis, it gets you get the temperature of the market.
Correct. It's
Uh,
interesting too. Yeah, for sure.
no, go ahead. You were saying.
Because it's interesting also because you get sometimes you get ideas, sometimes you get the sentiment of how the market is doing. Sometimes you get an idea that you're just like, no, I disagree fully. But then sometimes out of the blue, you maybe get a good idea. And that's what we're trying to do here too. It's just we're having a discussion, seeing what's up, and then kind of making our own decisions as the data gets presented, right? So yeah, it's
Yeah,
exciting.
it's I think, in my opinion, watching your portfolio and your individual positions and all the risk management and all that you check on a daily basis, maybe take some profits there and add to another position and anything like. But you have to follow the market. You have to follow the developments, politics, monetary policy, and most days you don't act on it. You don't trade on the news, but you want to know what is going on. And then you have the colleagues, and then you talk with your colleagues and you exchange ideas, and that's how you get investment ideas.
Yeah.
You
No,
don't just Google things and say, okay, let me buy Apple. No, that's not how it works. You have
correct.
to engage with the people that you respect in your line of work, and then you're gonna have an exchange, and sometimes give each other's good ideas, but at the same time, we're not pushing our ideas to each other,
Correct.
right? It's not
Yeah, yeah,
like,
yeah.
guys, I'm buying this, you should buy this. No, it's not how it works. You have to be able to hear the information with an open mind, and if you like it, go ahead and do it. If not, then you move to the next one.
Yeah, for sure. That's one thing I found too. It's like whenever we have the conversations, I find it I find it intriguing on just the way that people analyze different assets and how
Mhm.
we look. Like we are so varied in this group, right? We have Mimi Timothy with crypto, and then we have the macro on you, and then we have like me, which is like momentum and macro and a little bit of everything, whatever you put in front of me. But one thing I realized the most is that you sort of end up like, I don't know, I like paying attention to markets because like maybe today I don't make money and maybe the next time I don't make money, but then the second and third time I see something happening in front of me, I'm able to capitalize on it, you know? So it's almost like there's a funny saying I heard lately, and it was just like, it took me 10 years to become an overnight success sort of thing,
Yeah.
right? Because all of a sudden you hear the one interesting thing, and it was like, it's like whenever I started learning about NVIDIA, it wasn't even about investing, right? It was about other companies and other things too, right? So
And one
yeah,
one thing brings the other, and then you start learning about new sectors, about new stocks, and then the conversation in the media or between us, and then you say, huh? What do you say about that stock? And then you start looking into it, and that's how your circle of competence, as Buffett says, it gets larger and larger. Hopefully, you don't want to get too large and pretending to know about it. You pretending to think you know about everything, but yeah, it's how you grow your area of expertise. And to add one more thing, the money, in my opinion, this is an opinion, of course, it's not the money that I made, like the best trades that I made. It's not I saw something on TV or on Barron's or Bloomberg, and I said, okay, this is a good idea. Let me do this. The best trades I did, and ExxonMobil comes into mind in 2021. It's like when you're watching the media and you say, are these people nuts? Are these people calling like for an NVIDIA? Like, remember when NVIDIA was like $90?
Correct. Oh, the end of the AI trade.
Yes. And are these people nuts? And then where you have to find the courage and jump in, and then is where you make the money. Because by the time you hear it on the news, the alpha is already out already. So it's basically
Correct.
momentum. You're following the momentum.
Yeah. The dumb money guys say it's like whenever you catch a piece of information that the market doesn't fully understand yet or it's getting wrong, it takes like the news cycle to kind of come in and pick it up, right? And usually by the time it's on CNBC, everybody's now talking about it, right? So it's like there is like the news is getting diluted with the rest of the market and everybody knows, right? Obviously, like there are still times you can take advantage of it, sometimes buy the rumor, sell the news kind of events, and then all of a sudden you get that dip, and then there are another opportunities to get back in, which is very good.
Yeah, one of my favorite movies is Wall Street, the old one, in the 80s with Michael Douglas and Charlie Sheen, and he had a quote saying, "By the time you read it in the Wall Street Journal, it's already too late."
Yes.
So the same goes with the financial media, the TV, like the podcast and everything. By the time we talk about it, because it's in the news and it's relevant, it's already too late. We are already in it. Like by the time we talk about it, we're already in it.
Correct.
So
Correct.
yeah,
And like with social media, it's getting a little bit faster, but still, right? Like
yes,
even some of the trades, sometimes you have like seconds to pay attention to it. Like by the
yes,
time you write the post, you're already too late. Like the move is already sort of priced in, and markets are getting more and more sort of like active when it comes to these things.
yes,
That's why the long-term investment like thesis kind of holds up too, just because sometimes like your thesis just improves, right? Like if you like the asset beforehand and all of a sudden it improves, then you just want to either buy more or continue to hold, right? So it makes it easy.
yeah. And the longer
Yeah.
and the long term investing, it's often challenging um, because we are active, but we are not day trading, which is like a thin line we have to walk. Um, So you're invested and you have the option to just click a button and you trade, but we often not. We just watch the information, read, and try to make our minds not to act on it. And more often than not, is the correct decision not to not to not to follow your impulses.
Yeah. Yo, give me a second. One of the lights is dying.
Is it Christmas already?
Right, almost. Hopefully the Grinch don't come.
Yes.
Hopefully
Yes.
the Grinch don't come. But okay, all right. So now we're sort of stepping into the proper episode, right? Okay, so now I want to get your perspective, right? Because like last episode we talked about sort of like what the Fed did, which was like an interest rate cut,
Mm-hmm.
right? And I want to dig a little bit deeper to kind of like get your thoughts and kind of like start like throwing in the ideas into like
Yeah.
what could potentially be the trade here, right? So let's start with the macro perspective, right? Well, how do you see the current economy playing out? Are you still bullish? You bearish? What is sort of your current sentiment?
So I'm bullish. I'm remaining bullish, only because the Fed is sitting way too much above neutral, so it has the ammunition to cut, and that will support markets into the next 12 months. As far as the economy, we can see some warning signs, mostly the unemployment, the inflation picture. So inflation is not really damaging for the economy. It actually helps the economy. The economy is gonna grow more with inflation. It's not good for the consumer because it eats your purchasing power. But between the two, one does damage to the economy, the other one does damage to the psyche of the consumer. The one I'm worrying about, and I believe if you put a gun to Jay Powell's head and ask him which one worries you more, is it inflation or is it the unemployment? I believe it's the unemployment, only because when people start losing their jobs, then everything becomes more serious. Um, and that was the reason why they went ahead and did the 25 basis points cut last week, it was precisely because of the unemployment creeping up, and they want to get this early. But with that in mind, when the Fed starts cutting, they plan to keep cutting. It's not like we cut one now and then we're gonna wait 6 months and see. They usually try to start it and then keep going until they get the next 100 basis points. But yes, my worry is it's the labor market, not so much inflation.
Yeah. Yeah, the unemployment data came in very ugly, right? And
Mhm.
all of the revisions that came one after the other just kept making the market kind of spook, right? In the sense of like everybody's like saying that everything is fine. Unemployment is sitting at 4.1, 4.2% right now, or 4.3, I'm not sure.
It's 4.3.
4.3, right? So it's been slowly ticking up, but it's not like a massive change, right? Interestingly enough, the unemployment rate tends to peak at the end of the recession,
Hmm.
so whenever we see the massive spikes, it's usually at the end of the recession, right? So that's potentially something that is scaring me as well, because I think right now we are leaning towards the unemployment. Like it's that unemployment number that's going to dictate how the market will behave. I think we have PCE data on Friday, and then hopefully we don't get any spikes. And obviously, like so far we haven't seen the spikes because like it seems the manufacturers are taking a lot of the brunt
Mm.
in the margin. They're taking it in the margins, right? So it'll be interesting to see if all of a sudden like big companies start increasing prices as time goes by, but we haven't seen that yet, right? So
So the stat that J. Powell gave, it was the product prices went up 1.2% on the, was it on the CPI, was it on the core PC? Um, that stat was negative for like forever. Even as the quality grew, the the price of the products were always lower. So this is happened for the first time, and it's because of tariffs. But it did not translate to the worst case scenario everyone expected. We're gonna get, and you know what? Sometimes I get some comments on Etoro that everyone's expecting like a 4% inflation like next week, and it's been like 6 months since the Liberation Day, and we haven't got it. And Jay Powell yesterday on his speech on Rhode Island said that most likely we're getting a one-time increase, and that will be it.
yeah,
But he's not 100% sure that it's happening. But it's the only risk that it could happen, that we only get in one time, and it's wise to pricing the risk in your decision making. But I'm skeptical that we're gonna get that. So yeah.
I think we were like, I don't know, the markets were very scared of inflation
Hmm.
when due to COVID, like we touched like 9% inflation month
Hmm.
on month, like, and it was just like sorry, year on year, and it just kind of spooked the markets, right? America at those levels just is not the norm. It's not something that happens. And right after Liberation Day, that was the sentiment. The sentiment was like, this is going to be worse than COVID, which was outrageous, right? Like when you do the analysis and you realize, okay, like what can truly happen here? The reality is that okay, we're shuffling some of the products. Maybe some of the products from China are going to get sent to Europe. Maybe some of them go to the rest of Asia, and maybe we don't sell as much to the Americans, right? But it was a rebalancing of the economy. It wasn't a complete shutdown of supply chains and
Yes.
redistribution of everything. So this was one of the major things, right? Like this was one of the things that I think we caught up early in the market buzz too. It was just that like the idea that the markets were not going to panic, as like, it wasn't as much as the panic that the market was seeing. Market was like worst case scenario, world stops, which seemed outrageous. Like now looking at it does seem outrageous. And obviously Trump started with, the big foot on the table, you
Hmm.
know, but the reality was he changed that very drastically. Like, and obviously we've seen the delays and we've seen how that has gotten moved forward and forward, and we're truly seeing the reality of what he wanted to do. So it's a lot less problematic, at least is my thoughts on it too. But yeah, I wanted to show you something. I want to show you the
Yeah.
unemployment chart for the viewers too,
Yeah,
right?
and have a take about the unemployment and inflation going forward.
Yeah. Okay. Let me show you here. So let me show you the unemployment. So this is the unemployment rate in the United States. And usually it's like whenever we see this starting to spike, usually whenever we reach the high levels,
yes,
is when the end of the recession gets sort of counted in, right? Like if you look at the 2000s, at the end, the peaks is past the recession. So the recession is over by the time we see this, right? And right now we are seeing a tick up, which is scary, but we're also in a very different environment now. Many people say it's like don't tempt fate in this case, but this time, right, we are seeing the Fed potentially having enough room to print. Interest rates could come down drastically, and we could see this coming, like sort of fixing, right? So, what were you going to say about the unemployment?
Okay, so what we try to do as investors is to try to predict when we're going to get a recession, correct?
Yeah.
So let's say you knew when the recession will hit. If it was a guarantee that Q2 of 26 is going to be a recession, you will play your portfolio completely differently, correct? So as things are, with inflation being stably between 2 and 3%, so a recession kills inflation every time.
Yeah.
So as long inflation remains at this level and it comes down slowly, like it has in the last 12 months, then the economy is secure. Once you see a sharp drop of inflation, CPI, PCE, then you know we're in trouble.
Yeah.
Because they are going to celebrate it as okay, but it's not going to be good news. So with that in mind, my portfolio has been trying not to be all in tech because I don't want to have to change everything in that matter. But when we're getting the inflation data, I'm like, do I really want to get like a sharp drop in inflation? I mean, because usually when that happens, it's not good for the economy. The unemployment is going to spike, and then that's a different kind of a different patch of worms trying to fix that. So the best case scenario, and it's going to sound crazy, is for inflation to keep going down at the levels that it has been going down in the last 12 months. And hopefully we're going to get to under between 2 and 2.5% in the latter part of 2026. I don't want to see sharp moves on the upside or downside. Keep it consistent. That will spook the market like in a minute.
Correct. Which is also something I think would have happened if he had gone for the 50. I think if he had gone for the 50, the markets would have been like,
yes,
rally on the day, but then after it would have been like, okay, why did you do this?
Something is going on.
Yeah.
And you're not telling us, but we can't buy that you're not telling us because they don't know either. Because if because do you remember the July meeting? And then 2 days later we got the employment data and it was like off like way below estimates, and they were like, okay, I guess they didn't know either. So the conspiracy that they know everything and they're not telling us, I'm not buying that. They don't know.
Me neither.
They don't know more than me and you.
Yeah. They have a little bit more, like maybe a couple more computers. It's like,
yes, and that's
but
it.
holy smokes, yeah, no, it's true. It's very,
Yes.
very true. Okay, so let me ask you, how do you see the consumer? How do you see the rest of the data, right? So we talked about a little bit like, okay, interest rates, unemployment. How do you see the rest of the data, like productivity? I think we have GDP data tomorrow, potentially. How do you see the American economy panning out?
Okay, so the participation rate was down from 62.6 to 62.2, if I'm not mistaken. So the productivity, not the productivity, the participation rate is a bit down, but that also has to do with immigration and with lower supply of labor because of the immigration policies of the administration. So that's a warning because the immigration has been a consistent supply of labor to the United States like since forever.
Correct.
And they try to change it like on a dime, and it doesn't work like that. The consumer. So the consumer is difficult to read because the consumer is feeling good and spending, and then your neighbor loses his job, and then they stop spending. So the consumer spending changes suddenly and violently. But so far so good. I was just watching that new home sales, they were like above estimates just today. The numbers were announced. I don't have the numbers on top of my head, but that's a good sign. That's a good sign that the consumer is holding. It's going to get even better when the rate cuts continue going down. Last night, did you watch last night Jay Powell's speech?
It was a nothing burger, in my opinion. Like, I don't think he said anything.
He did. He only said one thing,
which is like the both risks, right? Like, we don't know what to do.
No. The quote is, stock prices are fairly highly valued.
Okay.
Which I agree with you. It's like a nothing burger, but the historians of the stock market compare it to Alan Greenspan, irrational exuberance. Right?
Okay. Explain.
So they say, okay. So let's give some context to the people that are watching. So 1995, the Fed chair was Alan Greenspan, and seeing the stock prices going crazy, like way ahead of the dot-com bubble, like 4 years before, he gave the quote that will stay in history, and it's been repeated over the years: irrational exuberance. So markets were going crazy up. It was like the 90s, everything was going up. And then the dot-com bubble happened, but it happened 4 years later. So let's say you listened to Alan Greenspan and you got out in 1995. Then you missed basically you missed the party. You missed everything. So if you are a fund manager, you got fired because you missed everything. So we have to put that into perspective, that if this is the Jay Powell irrational exuberance moment, which I don't think it was, I don't think he's trying to be as dramatic as that, then when the Fed sees irrational behavior, then we have a couple of more years ahead of us.
Yeah.
Basically what it means. So,
Well, the way that we're seeing with Oracle and all of the big companies, like this spending that they're doing, right? Like, they're getting the money out of somewhere. Now, the bubble usually ends when the money runs out, but it doesn't seem to be running out anytime soon, right? So
yes.
Potentially we got a couple more years on us.
I mean, okay, so let me ask you this. So we know that we're walking into dangerous territory with some of these companies that they've been spending. They throw out numbers that those numbers weren't possible 10 years ago. Like, when you hear about trillions of dollars, it's like, okay, you guys, you're going to spend trillions. So how do you position your portfolio in a way that you want to benefit from this movement, but at the same time, not to get caught with your pants down if something goes wrong?
You got to diversify a little bit, right? Start touching on a couple of places where maybe it's not directly correlated, right? Mm-hmm. So that's also something I want to talk about later in the episode, which is just like, I want to sort of understand what you think the Fed expectations are, and I'll show some of the data that I currently have, and then I'll tell you mine, and then we sort of like come up with who will be the winners and the losers out of this, right? Kind of thing, right? But I mean, it's interesting because the thing is like right now, right? Like, we're even seeing home builders starting to pick up, right? Mm-hmm. So interest rate sensitive companies are starting to pick up, which they've been lagging a while now. There is like, the thing is just like, there are pockets of value within the economy right now. Companies that have not seen the exorbitant rally, though, even though it's being sort of valid. Right? Because it's like, we are seeing the earnings expectations grow. We are seeing revenue growth, which is insane levels.
They are justified. The price moves, they are justified. Okay, maybe you want to tell me NVIDIA is expensive. Okay, yeah, I won't argue with that. But they have earnings, and they are backlogged, and they can't make them fast enough, and they can't make, it's like every time you open the TV, it's like, okay, let me give 5 billion to Intel and 100 billion to those, and okay, when management doing that kind of capex, then they have more money coming in. But at the same time, you don't have to be greedy, too greedy. You have to play it safe. You don't want to get killed if something goes wrong, because something goes wrong every time. So yeah, diversification outside of the whatever can be touched with AI, it's wise here. And the home builders, by the way, which are rate sensitive, do you know what is going to make them go crazy for you? The executive branch, because the home builders cannot build homes fast enough, not because people don't want them, but because of all the zoning problems and regulations within the states. If you are in California, you can't build anything, because the rich guy that has like a mansion doesn't want another guy. You know what I mean? So in some parts of the United States, Illinois, New York, California, some parts of Texas, you just can't build. The regulations are there for people, discouraging them to build. So, and Trump was trying to address that. I'm interested to see if he can get that done, because that will bring home prices down, then allow more people to buy houses, and housing's a huge part of the economy. This is again also looking the long term. This is not going to help you if you're trying to make a trade in the next week.
Yeah, that's the thing. That's the thing here. I think the long term perspective kind of comes into play now, because it's like now we are seeing sort of like that. Like we've been in the rally, right? Tech has outperformed, right? Everybody making 30-40%. It's like, okay, what happens next, right? Because the thing is just like, it's great to see, like, look at the markets whenever they've already decided the prices, but what's coming in the future, and that's what we're trying to figure out here. Mimi's asking if it's too dangerous to buy NVIDIA right now, and I think he's just like, look, if you're gonna buy it for tomorrow, maybe, you know what I mean, but do I think NVIDIA is like worth $200 at the end of the year? It's a possibility, right?
I mean, this is a question that I get a lot, and it's coming from someone that I think is like my second or third largest position, and saying to someone it's risky to buy here sounds like almost I'm trying to keep all the profits for myself, but I'm up on it like 400%. So the risk to reward ratio is different for me. But yeah, I wouldn't buy it here.
Yeah, like I think it can continue. It's gonna continue to go up, but can the short-term volatility, can the seasonality come in?
Yes.
Many different factors can kind of come into play here. So,
and you know what? If we were in the crazy markets that everything is up, everything is year to date double digits, then okay, you say, okay, fuck it, let me buy NVIDIA. But there are other parts of the market in tech, like for example, I increased my position in Amazon yesterday, which I talked in the last episode that I was looking into Amazon. I increased my position yesterday. I mean, Amazon has been flat, like year to date. And they can deploy AI in a big way, like through the cloud, through the e-commerce. So the AI premium that adds to equities, some companies, they can't do anything with the AI. They can say they're going to use AI, but they can't really do anything with it. Some companies, they can do a lot with AI. So I'm trying to find those and get away from what already worked for this year. That's just risk management, like for my taste.
Yeah, I heard some of the, like, some big investors talking about how they plan to, like, it's like if they're looking for AI, like they're gonna take a little bit from NVIDIA and put it somewhere else if they think that there's an opportunity somewhere, but they're not gonna increase the AI exposure. It's like, okay, like now that I have these big winners, I'm gonna diversify those big winners. Maybe some of them will collapse, some of them will win, but I'm not gonna increase my exposure just because it's so big.
Yes. So institutional investors have sector allocation, and semiconductors is like a sector, and they have like a 5, 10, 15% or whatever. And that's exactly what happened with Intel last week when we got the announcement from NVIDIA. Who got hit? AMD. So people rotate their profits from AMD into Intel, and that's what happens. You just switching from one stock to another without increasing your exposure to the sector because you want to be protected, and that's what happens. So the news cycle works. The Intel thing that you went on and you called it a long time ago. So let's give you credit for that. You are the only one that you were like talking about Intel, but it wasn't anything based on fundamental. It was like
not at all,
right?
Like no, you know?
NVIDIA came and just blessed them.
Correct. Trump came and was like, "Let me take you, young child."
Yes, but your instincts were correct that the U.S. is not going to let Intel fail, and it wasn't like the U.S. probably like Trump called Jensen and say, you know what, why don't you give $5 billion to Intel, and that's what happened.
Yeah. No, and the thing, what you know where I got this, talking about what we were talking about at the beginning of the episode, how sometimes you just get ideas. Like I remember when the trade deals were coming out, Trump was like selling, like he was like, we sold this amount of planes from Boeing, and I was like, what? Like, why is Trump selling planes? Like, what are we talking? And I just didn't understand it. And now looking at that trade, that was an amazing trade. Like Boeing has bounced from the lows.
Yes.
Like it was a fantastic time to buy Boeing at those crises, right? So it's like, okay, what can we see here, right? And it's like all of a sudden it was the same thing. I was like, they're gonna have to come in. They're gonna have to come in. They're gonna have to come in. Like every single person needs chips.
Yeah, but you know what with Trump, and this is a new phenomenon in markets, that the president is gonna get the hands of the CEOs, take them to whatever country they're traveling, and put them in the same room with the buyers and tell them, okay, this is a Boeing CEO, you want planes? Okay, why don't you guys get something to eat and talk? And then we are watching and laughing, like, okay, they're going to buy Boeings, because it sounds ridiculous in the press conference, right?
Yeah.
It sounds ridiculous. Okay, well, they need chips and they need Boeings, but you know what? A few months after, and it sounds simple, like after the fact. Like an easy trade.
Yeah. Like that's the thing. You know, it's like you don't like it's crazy. Like, you know, it's like sometimes you're watching the most random piece of information, and years later it's just like click.
Yes.
You know, it's like whoa, and then all of a sudden you're making money out of that piece of information that you just withheld. You know.
Yes.
So it's
only obvious after the fact.
Correct. Yeah. By the way, Mimi saying she wants to jump on, and I'm like, come. Come.
Get her on.
Yeah. ACM Music says he bought more Amazon yesterday. I like the Amazon trade. I've been looking at placing a position on Amazon, bigger than expected. I've been looking at a couple of I'm kind of starting to go degen, but on stocks, which I have a theory. There's a way to go degen on stocks that makes crypto look freaking like nothing.
Okay. Hey, so save that for Mimi. So
yeah, I will. But okay. So let me ask you, what are your thoughts on the Fed? Like how much are we gonna cut? Like what's sort of your neutral level?
Okay. So yesterday, so it was an FOMC meeting last week, and he came out neutral. Some people they say it was like dovish, and the market expected like more cuts.
Yeah, or at least a hint that they were gonna do more cuts.
Yes. Hello.
Hi.
Yeah, or at least a hint that they were gonna do more. Maybe do you have the YouTube video on?
Hi.
Yeah,
oh, I do actually.
That they were gonna do
1
more.
second.
Yeah.
Yeah, turned it off.
Good.
Yes. Awesome.
Yes.
Hi guys. Keep going. Ignore me. I just got really excited, so I thought I'd jump on.
Nice.
So nice to have you in the conversation, because Nestor has a take about how to be degen in equities.
Yeah, I heard degen. I jumped right on. I'm like,
let me jump in the call.
I have I've no makeup or no nothing, but I'm like, doesn't matter. This conversation is just too juicy. So I'm here.
Nice.
All right. So what I was saying, about the rate cuts. So it was neutral, like slash dovish in some ways, and okay, and then the market said, okay, we're gonna get another one, at least one more by the end of the year, and few more the next year.
Yeah.
So yesterday, he was invited to a Rhode Island like event, and it's like a different setting. It's not doing a Q&A with a hostile press asking him questions. So he was more relaxed to say whatever he wanted to say, and he didn't say anything like. The market reacts to it. Like if he coughs, the market just drops. It's not. He didn't say anything that had me change my mind, but in some way, very sudden, in a very subtle way, he tried to readjust expectations from the market.
Like more neutral. He wanted to go back to neutral.
Yes, and one more thing, I don't think the Fed cares about markets. I think the Fed cares not to get markets into a bubble area and not to get into a very steep sell-off, those that traumatize you if you live through them. I think he likes a neutral approach to the market. So the Fed cutting 25 basis points for the markets, that's just nonsense. The Fed cut rates for the labor market, and we just happen to be invested in markets, and we got the treat, and the treats that keep coming in the next 12 months.
Yeah. Here, like this is the Fed watch tool that I tend to use to kind of like see what the market is saying in terms of like interest rate cuts. Right. And we are expecting in the October meeting, we're expecting a 94.1% interest rate cut based on everything that's going on right now. Sorry about that, everybody at home. And then in December, we are also expecting a cut, right? So we're expecting 2.25 basis points cuts on here, right? We're sitting at 75%. And then January, the thing was like we were expecting 25 until March. And now we saw that slow down a little bit. So the Fed is doing the job of kind of slowing that down. And then we're saying potentially we stop up 325.
Yes.
Right. So this is sort of like the long term, what we're expecting for 2020, the end of 2026, 2027. But obviously, like this changes based on the data, because we got also the summary of economic projections, which sort of tells you what every member is expecting. And we saw that this is what the market, what they were expecting as well, right? Obviously, this changes. If we see a spike, that's the nice thing, something that you said, Dimitri, who says we have the ammunition to tackle any major problem that arises because we're able to cut quickly. If an emergency comes, we have that ammo, which is something.
Yeah, but the expectations from members now going to have to take them with a grain of salt, because the crypto guy is going to be asking like for 200 basis points of rate cuts every single meeting. Okay.
Well, you know what? Like he was like he said he wanted a massive cut really quickly, but he's actually following the trend of every other member long term. So now he's like, look, we need to put it down, but also I understand that we're not going to go crazy. We're not going to go into negatives.
I watched his interview on CNBC like the following day, trying to justify his position. And you know what? He made a case. You know what? He made a case. Okay, it wasn't very compelling for the rest of the members to agree to it, but he made a case for a larger rate cut. So yeah.
What was his? I didn't actually watch that one. What was his case? Again, remind me, because I think you mentioned it.
He was talking about the unemployment that is more dangerous than what appears, and being so much above neutral, it's better to get out of the way, and then
it could spike really quickly.
Yeah.
So the plan, I guess their plan is like 2 more 0.25 cuts this year, right?
So that's the plan from the members, or
That's
that's
what-
the market expectations? That's
Correct.
The plan.
That's
Okay.
the market expectations, but
Okay.
but Jerome Powell is saying I'm still data dependent. Anything comes that I don't like within inflation
Yeah.
or within, so what he did was grab the puck and move it to data. Move it to data. It was
Yeah.
just like, we just have to pay attention to that, which is his job. You know what I mean? Like he can't just
Yeah.
he can't just be like, you know what, today we're just gonna cut.
Yeah, but then like reading between the lines, I guess everyone's just trying to guess what's going to happen this year, because this first rate cut, which everyone's been waiting for so long, happened, right? And then a month ago, and I know I've spoken to you guys about this, like what if it's buy the rumor, sell post event, obviously. And so far we've seen buy the rumor, sell post event. And everybody is like, why? Why did that happen? Because, and especially crypto, and we'll talk about crypto tomorrow, but it's more so markets in general. Why did we not rally like crazy? Everyone got so excited, and now everybody is so upset. And I can say for both crypto and equities as well. I mean, correct me if I'm wrong, because everyone expected so much. So it's like, what? Why? I mean, I don't really have a specific answer to that. But was it just like too anticipated, somewhat?
I think we were too bullish, right? Like I think it was like we were expecting Jerome Powell to say, ladies and gentlemen, it is time for interest rates to go back to zero. And we are starting a path to slow it down so fast that everybody will be able to borrow money like there's no tomorrow. You will get 10 houses and we're going to bubble this bubble up. We didn't get that. Like, right? Like the fact, like the way that I see the Fed is like the Fed has like this lever, and it can either be tight, it can be neutral, but even I think neutral is like fictitious. I don't think you're ever a neutral, or you can print, right? Like you're either in those sort of levels. You're tight or you're easy, right? What he did was like we were tight and he was like a little bit less tight. And I think he actually went into like easy. So then what he tried to do was go back to neutral, because like small shit, like the way that I see the Fed is like they're a hammer, right? And they're trying to like they're trying to do origami, and the only tool they have is a hammer. It's like, so it's like they can only tap small, super small, in order to do these things. Otherwise, the repercussions are massive, right? So I think it was just the expectations. The expectations was we were going to get the 50 basis point cut. That was that was starting to get priced in. We were going to go like fast cuts because the unemployment data, like it just surprised everybody. Nobody was expecting it, even though the Fed was expecting it already, because we know that the data collection is having issues. So that was the big thing here, right? Like it was just the expectations were too high, and we sort of pulled them back a little by not saying a couple of words, which was just like we're going to cut quickly, or we're going to stick to a cutting path, or.
And the setup was put us in a position to experience this, because the market's been doing very well since June. I just heard the stat like an hour ago. It has been 107 trading sessions without the S&P losing 2%, which is the best, which is the longest record since 2024, like June of 2024. So it's been a long time since we had like, I mean, 2% for the S&P, it's nothing. For some people losing their minds, but for most people, like for us, it's like nothing. So we haven't experienced that in a long time. And then if people start thinking, okay, maybe this is going too well, let me adjust my portfolio. And when is the next earnings season starts?
Starting soon,
right? So we want to get the earnings season. Is it before the next FOMC? Like at least the financial starting.
So it starts in October, next month, the next week, almost.
Okay.
We start.
So we're gonna get the beginning of the earnings season, see how that goes, and if it comes like the one that we just had, then the party continues. Then we go into end of October with FOMC. If they cut one more, then we keep going, and then eventually the end of the year. That in bull markets, the markets have a melt up for the end of the year, and then that's your year.
And then tax season.
Yeah.
And then with earnings, are there specific companies that we're interested in? Like, for example, Mara.
Okay, so this is the big one. Okay,
See your
let's
face.
talk about this.
I was waiting for Nesta's face to like ding.
Yes. So I've been following Mara for so long, and that company has done nothing. It does nothing until it does, and then it goes up like crazy, and then it comes back down because it always comes back down. But this time around is different. Even though I'm gonna eat my words because I know it's gonna come down because it's what it does.
Yes.
It's like so because that's the thing, right? So okay, so that's one thing I want to talk about, which is sort of like, okay, we know what the expectations of interest rates are, right? We're gonna get that sort of like money becomes cheaper to access. Who wins out of this? And it's any company that needs infrastructure, any company that needs building, that needs high amounts of capital in order to grow, in order to continue. Home builders, factories, even data centers at this point, right? They're gonna benefit because it's gonna be easier to access this money. You're gonna be able to borrow on lower rates, which means you're gonna be able to just spend and increase those earnings as time goes by, right? And like the cheaper it is, the more margin you have. So low margin businesses are going to increase those margins, like solar companies. I'm looking at just like the spread energy companies are going to benefit from this. Many different winners, and I want to get your thoughts on this too, because I know that crypto for sure is going to benefit out of the like low interest rates, just because it's easier access to capital, right?
Yeah.
So who do you think wins?
I mean, I haven't looked into this like completely. It's on my radar now, and especially because you brought it up. So I mean, I don't have an opinion right now, but
Cool.
I am long on Mara. I've already invested. I have already invested.
I just like Mara is like I started my investing career mining Bitcoin.
Yes.
Like, you know, it was like I still have the same case for my computer, for the same case that was mining Bitcoin, the first computer that we ever bought to mine. You know, and it was like I remember it, and it was like all of a sudden the computer would go like superpower. You know what I mean? All of a sudden it was like, okay, and I was like, this is hard. You know, it's like creating the systems and maintaining the systems. It was difficult, and the fact that Mara stuck with it so long and was actually able to become profitable and actually start mining and creating different systems, this was the thing that made me fall in love with the company. Now they're pivoting. So they're pivoting into the AI infrastructure because they already know how to build data centers. They already know how to, like, they're a factory of compute. And they've been a factory of compute since before AI was cool. You know, so I think that this is just a transition that they see. Like CoreWeave was also a company that did this. They have the expertise. They just implement them in a new field, which is now AI, artificial intelligence.
All right. So let me ask you this, because now you made an interesting point, the AI infrastructure. So that puts them in the same boat with NVIDIA.
So the thing is, no, right? Because the thing is this.
Let me make my case.
Okay. Oh, sorry. I thought that was the case. Okay.
No. Let me explain to you what I mean.
Okay.
So, what's the risk with NVIDIA? The risk with NVIDIA is that we run into trouble, like a recession, and then Google, Microsoft, Tesla, like the hyperscalers, they stop capex, and they're not buying from NVIDIA because NVIDIA sells like to them basically, okay? And then NVIDIA goes, okay, let's not think where it goes if that happens. So Mara is in the same boat because it's AI infrastructure. If something goes wrong and the AI spending from the people that spend to the AI spending stop spending, then it's in the same boat with NVIDIA. But NVIDIA creates something from nothing. Mara
is using the pigs, right? So
Yes.
it's like in the gold rush, like NVIDIA sells the pig, and Mara is like, I'm gonna rent you the pigs.
So that's the risk for them when something goes wrong.
The difference here is that they already have a profitable business mining Bitcoin and Ethereum. So also the crypto markets would have to collapse in order for Mara to stop having this useful compute. Like I think Mara right now can mine a Bitcoin for 27K because of the way that they've played their energy.
Are they selling the Bitcoins they're mining, or
they're holding it? They're holding it because the thing is like, so they're able to get it. They're able to get it. So what they do is they'll buy like for example windmills and like solar farms, and they'll use that energy to mine Bitcoin. They either sell it to the grid, or if it's more profitable to mine, they'll mine, right? So what's going to happen now? AI compute's going to come into the picture, and they'll sell the compute to the AI companies. But if it's not more profitable, they'll just go back to mining. So they'll continue to change this, So it's like they have a base case scenario where they're just a miner. They'll just continue to run the Bitcoin network. And then in the other case, they have a potential. It's like, if we can make more profit, we'll rent you the servers. And even for the stuff that becomes obsolete, they'll just use it to mine.
Okay,
right?
So what about the Jim Cramer risk?
I mean, sometimes he gets it right. You know what I mean? I like to. Where's my cup of copium? You know what I mean?
He is such a good indicator to do the total opposite.
Yes.
But the thing is, Mara has done nothing. Like, if we look at the Mara, Mara.
So give me some stuff, because I don't follow the stock. What's the year to date? What's the ratios? The things that most people would understand. Yeah.
So let me
some context to the people that are watching.
So let me show you my data. Let me show you. Let me connect to my data, and let's start. I hate Mara. I freaking hate it. You know what I mean? It's I hate Mara, but Mara's great. All right, so this is Mara, ladies and gentlemen. This beautiful, beautiful company. I have so many freaking
Before you get into it, I think you mentioned also Mara potentially could do the Oracle run, and you can talk maybe
100%. So I think Mara, if it was able to just sell one of the if you look at, I think they have in terms of what they have is insane. But it's like Mara during the Bitcoin rally in November hit $84.
Yeah.
And the stock has not recovered. Now, the stock has not recovered because management has been taking advantage of the rallies in a massive way. We just seen the stock likes to go the stock in October 2023 almost $7, and then it shot up all the way to $30. That was when Bitcoin was crashing, and then it bounced back. So usually it's very tied to the price of Bitcoin, but we've seen a decoupling from the price of Bitcoin lately because of the potential that it has into the AI revolution.
What's the beta? What's the beta for the stock? The beta.
You're gonna make me start looking at crazy things, but
I'm just curious because it went from 80 to 7, so I'm just curious to see what the beta is.
I think it follows usually it follows just Bitcoin pricing. So I would say whatever Bitcoin's price used to be, now it's not like that. I'll give you that data. I'll make sure to give you that data because I don't know where to find it right now. But
I'll look for
this. This was the thing, right? It's we've seen sort of Mara consolidate, and now we're starting to see volume pick up. Interest is starting to pick up, and it's starting to get talked about a little bit more in the.
Has a beta of 6.3, 6 times more volatile than the S&P.
Yeah,
there you go.
Yeah,
I'm not surprised.
It likes to move. But the thing is it just does nothing until all of a sudden people start paying attention. This is the market cap of this company sitting at $6.6 billion.
So it's tiny. So it has a lot of room to run.
Yeah, and I think it has $5 billion worth of Bitcoin in their balance sheet. So it's they have a ton of debt.
If I was Michael Saylor, I would just buy them.
Yeah.
At this point, it would make sense.
Buy a company and get the Bitcoin.
Yeah, and then just add mining to your business. Yeah. What's my MicroStrategy sitting at? Oh my goodness. This wasn't supposed to be a Mara episode, but I love Mara. MicroStrategy sitting what? 92 billion? Enterprise value sitting at 103. Right. And this is at the lows, right? This is he could have bought. The thing is Mara has played it very smart in the sense of Mara has borrowed a lot of money into strength because they're willing to invest. And they've been buying and they've just been diluting. And one of the things that Dragos will agree with me, he's in the chat right now, we just keep getting diluted. So every single time we have a rally, they're dilution. And it's God fucking damn it, dude. Just let me just make money at this point, So they just keep diluting and keep diluting.
Yeah, dilution is never good for investors. I mean,
but the thing is it's not a bad business idea, right? Because they want the money right now in order to capitalize on whatever is coming next. Which they just want to build infrastructure and invest in infrastructure, which is not a bad thing for a business to do. They need more cash to do what they want. And I think they're like, if we see the core weaves being profitable, if we see Oracle being profitable, like Mara could come in and fill that gap as well. So that's what, like, I think. And with the new big, beautiful bill of Trump, whatever you build, you can depreciate in the first year after completion. So right now, any company, you're going to get low money, like low cost of capital, and you're going to get 100% depreciation after your factories are done. So who benefits? The people that are building the companies here. You know, it's like you're just going to be able to build, and it's just going to be a cost that you throw. Make sure to increase productivity as much as you can in the first couple of years, and then later on, you just like take advantage of whatever is left.
Do you know what kind of feeling I'm getting? I'm getting a feeling that this company is going to get bought from someone like soon.
Like it's tiny. It's tiny compared to anything.
It's tiny, and it has a lot of assets, which is Bitcoin, which you want them.
Yeah. Every time Dimitri makes a call like that, it generally happens. It generally does happen.
I hope, but I'm gonna be so pissed if they buy my shares from me. I'm gonna be so pissed. I'm so mad.
I'm just so fucking mad. If I was like Michael Saylor, I'll be licking my chops right now, buying this company and getting the Bitcoin and getting the mining business.
He's the second biggest holder of Bitcoin after after Strategy.
After Strategy.
Yeah. And they have the infrastructure to make 800 Bitcoin at a freaking month. It's crazy.
Interesting.
It's crazy. I freaking love Mara. I love Mara. I hope it does well. Peter Thiel, if you're listening, please don't fucking sell it. Rent it out. I don't care, but make me money, motherfucker. I've been holding for way too long. Are
they mining Ethereum as well, or just Bitcoin?
No, they used to be so proud on the fact that they were just like, we're just doing Bitcoin. Like, fuck anything else. We're doing Bitcoin. And right now they're doing a little bit of AI stuff. They started doing like AI mining, like crypto coins and stuff. But yeah, so I think those would be the winners. You know what I mean? I think the winners are companies that are gonna spend. Like right now, everybody you want everybody to spend right now because you're gonna be able to depreciate 100% of whatever you invest. So that's just gonna come like beautiful profits later on, right? Yeah. Like that's the play here, right? So Mara, I like. I hope it pays out. Like Mara holders, hold strong. I believe Mara, beautiful Mara. You know, I love the stock, but yeah, holy.
Okay, so now tell us your Degen theory.
So
yeah.
Okay. So the thing is like, it's not great. So they started to like, okay, and this is very interesting, right? So I think margin debt is at all-time highs right now, according to FINRA. Margin debt is sitting over $1 trillion, and I think we just continue to go higher and higher and higher. But there's something that they're not taking into account, and it's the fact that right now there are like leverage products that allow you to sort of bet on companies 2x, 3x by just buying an ETF. They make it super simple to get access to capital. They just do it with options, swaps, different products, and depending on how they structure it, you can make money. So, for example, one of the most profitable trades I've had during April, I sold all of my NVIDIA, right? And I bought NVIDIA. So it's an NVIDIA 2x leverage ETF.
Then you have like NVIDIA in 3 different ways, like NVIDIA 2x, NVIDIA.
I have options. I have NVIDIA. Like now I think I have a little bit of NVIDIA left. I'm starting to go back into NVIDIA. I have the 2x, I have the 3x, I have the options on the 2x, and I have the options on, and then I have puts. Also, yeah, I have also options. So I have NVIDIA in 5 different instruments. Yes. So it's like, so all of these different instruments sort of like play in a very interesting way, because the thing is just like, they have to buy the underlying asset, right? Like the company that you buy this product from has to buy the underlying asset. So there's a positive movement whenever you buy it. If you're bullish on it and you buy it, it can go up, but it can also come down drastically, right? So you don't want to hold them in periods of uncertainty, because there's this thing called volatility drag, right? So on the downside, right, it can come down drastically, right? So for example, like let's say you have a 2x, just to give you big numbers, so we can like sort of like explain this. The leverage ETFs is like, let's say NVIDIA goes down by 50% and NVIDIA's worth $100, to give you an example. If NVIDIA drops 50%, it goes back to 50, right? And if it goes up 100%, it goes back to 100, right? Now, the leverage ETF, if it drops by 50, it would completely collapse and it would not exist. And then if it goes up 100, probably it'll go to like 1 cent. And if it goes up 100%, the leverage ETF will go 100%, but it'll go to 2 cents. So all of the money that you had will disappear, you know? So on the downside is very, very risky, really risky. So I'm trying to get out, you know, I'm trying to get out of my positions, but they're really profitable and there's a tax liability. So we're running into sort of issues there, but that's what I'm paying attention to. It's like right now you can buy a 5x leverage ETF on the S&P 500 and the NASDAQ, 3x. All of these different things don't get added to the leverage to the FINRA margins. So we don't really know how much leverage and how much margin is out there, which is insane. You know, that's also something that is scaring me. But the degen here is like, let's say you go like usually an options contract is 100x the value, right? So usually if an options contract is $1, that is $1 multiplies by 100. So you can buy options on leverage ETFs that are already 3x. So the leverage that you're putting on a position, NVIDIA, for example, could be 300x.
Okay.
Degen.
Okay, it's still like you buy an underlying asset like NVIDIA and the S&P, which is like a good asset. The degen that I had in my head, and perhaps Mimi can correct me if I have the wrong impression about degens, are like, you know what I'm going with this, right?
Yeah.
The degen I had in my head is like, you know, people in their mother basement, like trading like meme coins.
Look at where I am.
You know? You're not trading meme coins, though. You're not trading.
But the thing is like I understand them better. You know what I mean? But the thing is like some of the results. It's like I bought RKT with options. It's like $100 makes me $1,000 in a couple of weeks. You know, it's like the explosion is massive, and the downside for me is capped. It's like if I get it wrong, I lose $100. If I get it right, it's 10x. It's crazy.
Is this
more? Do this. I'm not saying do this. This is not financial advice. This is a non-financial advice time.
No.
You know.
But is this more degen than crypto degening?
No, the thing is it's not. But then when you start going into
it sounds
like
scary.
The 100x and the leverage and the more leverage on top of more leverages, like the moves are crazy. Yeah. Like some of the moves, like I showed you today, like LAC, the calls on LAC were 10 cents. They're sitting at $5. Like it's like, you know what I mean? So it's like, it's insane. It's pretty like, you know, in terms of like the level of sort of moves that you're getting, like it's some crazy moves, like Alibaba calls. I remember looking at Alibaba calls prior to earnings, and they were like at $5, and I was like, I'm not paying $5 for this. Fuck you. And like, they're sitting at like 2,000. It's like it's nuts, you know. So yeah, like I don't think it's the same sort of level of degen. You know, it's because like the thing is just like I do have a little bit of like, you know, some people don't know, but muchas gracias. But yes. So yeah, like that's the level of degen. Like right now, like the level of leverage that you can go, imagine going options into a 5x S&P 500. It's like on a 1% S&P day, you can make 5 times 100. It's like 500%. Isn't wow. It? You know, that's which usually like you have to go in and you have to. But it's So this is like starting to be like, and the thing is when you look at the volume of these contracts, they're not like. I think you get more volume on meme coins sometimes, for sure.
Yeah,
than some of these contracts.
Yeah,
it's crazy, you know. So that's the degen aspect of what I've been sort of like going into. But it's like I don't go with a lot, but it's like they've been paying. You know what I mean? Like it's like with the market right now. Like you know, I have Antonio in the chat, and he's like BABX. Like I think that's a 2x Alibaba trade. You know, and it's just like it's just been outperforming. It's like crazy. Like all of a sudden, Alibaba moved, and it was like boom.
Yeah.
Hmm.
So I guess now, I mean, like, I'm sorry to like hijack your stream today. I didn't want to bring up like Bitcoin and crypto or anything, but the question now is for equities, just markets in general. What do we see for the rest of the year? The rest of the year. So quarter four is coming up, October, November, December. Quarter four. What is quarter four going to look like with the expectation of 2 rate cuts? And what if it's just one? What if it's just one? Does everything crash?
I think we see a pullback for sure.
Yeah.
Dimitris, I want to get your thoughts on it.
So you don't think the S&P? Okay, so let's put in context. So let's talk about the S&P. So the S&P is sitting now 13% for the year, something around there, 12, 13, 14, whatever it is. So don't you think it reaches 18, 19 by year end with one rate cut? Let's assume it's in December. Because the worst case is to get a rate cut in October and not get one in December.
Yes.
Oh, that's not a good scenario. It's better not to get one this month and get one end of the year. That would be a better scenario. Okay, so let's assume we get one. Let's assume we get one in December. You don't think the S&P goes up another 5, 6, 7%?
I think market gets spooked short term. Maybe it does, right? But I think there will be like fear, even though it's only interest rate sensitive that should get affected.
Okay, so just disregard the fluctuation between now and then.
Okay.
What would you say the S&P ends the year if we only get one rate cut by the end of the year and nothing crazy happens with Trump or anything like that? So everything stays as it is and we get one rate cut. Where do you think the S&P finishes the year?
All-time high. I don't have a number, but I still say all-time high.
No, I think so. I think we go higher, for sure.
Yeah, I think we do.
5-6%? Another 5-6%?
No.
It's too much? 5-6% is too much from here?
Wait.
1, 2, 3.
What would that make it? Man, I don't even look at S&P every day.
You make it like in the 17-18% like for the year.
Let me have a look. So we're sitting right now, what, 6,680?
5-6% is a lot, hey.
It's a lot for the S&P.
It's not possible. It's not impossible. Not impossible. I overall, I think that, yeah, all-time high for certain. I still think going into October, and I know I think about crypto a lot, but it goes hand in hand. Equities and crypto right now still go hand in hand. I still think going into October is cautious. So the question is, what would be the catalyst for that?
Like,
for us to be cautious, because September, as I said, I'm not just saying I'm right every time. I'm just saying September was going to, and it's still it hasn't finished yet, so I shouldn't speak too soon. But September was going to be not as bearish as everybody thought. I still think that we're going to end green, contrary to what most people think, contrary to what X thinks and social media. So then I've been racking my brains, and I know I've been trying to speak to you guys as well. It's just like, what are we going to find? What will happen in October? And I think we need to be cautious going into October, but still a great end to the year. Fantastic.
Like earnings if earnings are good and we only get the 25 basis points, 7,000 is easy, right? Like as long as we continue to see earnings outperform and continue to see beats and beats and beats, no problem.
You know what? I think it's more. I think it's more than 7,000 because now 7,000 has been like the target, like of everyone. And when everyone's giving you the target, it means it's more than that. They're just giving you the conservative estimate, not to be wrong. That's what institutions do. They don't care to be right. They don't like to be wrong. Okay, so the 7K estimate for the year-end target is what everyone is expecting. So if thing goes well and we get one rate cut, then it's a 7,200 for the S&P, which is, what is it, like 6-7% from here. Yeah, so you know what? I wouldn't be surprised if the S&P gets a 20% for the year.
Wow.
20%, okay. Yes.
Let's have a look.
And it doesn't have to be all NVIDIA.
The thing is, like, even the NVIDIA, like NVIDIA, it's interesting.
Apple is up 10% for the year. So what? Apple can get another 10%. Amazon is flat for the year. It doesn't have to be all NVIDIA. A rotation can happen within the Mac 7, okay? And the S&P is strong without NVIDIA going to 250.
Correct. Yeah. I think so. Like, I think the Mac 7 right now account for what? Like, it's what, 40% or 30% of the 30% of the index?
Yeah.
I think the Mac 7 is crazy.
And not all of them are like near all-time highs or had a good year. So they are like things can happen. And you know what? I'm doubling down on my. Remember, I said at the beginning of the year when the S&P was down 10%, that the US outperforms Europe at the end of the year. I'm doubling down on that one.
December 30th. I'm gonna go live. I'm gonna go live December 31st.
Where are we standing? Where are we standing right now?
You're close. You're close.
Yes, on point. But
yeah.
Okay.
But yeah, no, I mean, like, the rally we've seen, because that was another thing, right? It was like the US dollar. Like, I think we just reached all-time highs in the S&P 500, just reached in pounds and in euros. Because that was another thing. There was a lot of this rally had to do because of the devaluation of the dollar. You know, I think the index is down kind of like 15%. The US dollar is down 15% in relation to every other currency. So that's an interesting piece of data too. Like, we could potentially.
And I have another thing that I would like to get Mimi's take on this one, because I'm talking to people on a daily basis, and you know, those people that come talk to me about crypto. But one thing I'm getting from them is the following: that they all remember the last cycle and being at the end with the holding the bags. And you know what they're telling me one by one this time? That they're going to try to get early and get into equities. Like, I rather get into the Nasdaq or the S&P or whatever, take profits early and get into that. So let's speculate for a minute that all season happens by the end of the year. Would you say that some people that they have some trauma from last time, they maybe going to try, and that also is going to add to the equities rally? Is that so crazy of a case, of a theory?
I do see that case there. So what you're saying is that because of the PTSD that people have felt from holding the bags from last time, that they're going to get out as soon as they can, even not close to the top, right? In this scenario, and then rotate into equities. That's what you're saying.
Yes.
My answer to that is logical, but based on psychology, and unfortunately, and I hate thinking this way, and I hope that I'm proven wrong, but based on psychology, the greed and the FOMO is so consuming that people are not going to. And I will do my best to scream at everybody and say, I'm getting out. And I may get out 20% before the top. Okay. I don't know. I don't know where it is, but I will be screaming. And if people don't, then people don't. But based on psychology, your scenario makes complete sense for sure. And I hope that happens. But based on psychology and just humans in general, and the people that I've interacted with the last few weeks of having to deal with the volatility of crypto, it's the same pattern. It's unfortunately the same pattern. And people are bag holders, and I hate that.
But you, as the crypto authority on Etoro, you're gonna get out of crypto, and you're gonna be sitting on 80% cash? No, you're gonna deploy those into equities.
Yes.
So people, I was referring to people like you. I wasn't referring like to the digits. That you know what I mean? So
TQQQ calls. TQQQ calls. Is that the way?
So,
oh man.
So that okay, but the timing of the old season, assuming it's happening, has to
Yes.
finish. Yeah, but it's a different breed of because the new people are going to come in. The new people have to come in, the extra liquidity for the to hold the bags for the rest of us. But some people, and you know what? I'm not ashamed to say that last time I was caught up holding the Ethereum bag. Okay,
Hey, me too.
so I'm getting out early and I'm putting that money into ExxonMobil.
Yeah.
Yo, I want to talk to you about oil. Real quick. You got 5 minutes. You got 5 minutes.
Every time. Let's go.
It's all about oil. It's all about oil. The blood of the economy. I want to, because that was one thing that you talked about. I want you to expand a little bit, right? Like, what are you seeing sort of in the oil sector that I'm missing? Because it's like energy. Because and I also want to tie it to energy.
Yeah.
Because I want to. So because I know that the energy demand right now is through the roof, right? Like there's like 2 companies that I'm paying attention to. First, Solar, Fluence, companies that have been sort of like exploding right now just because of the energy sort of need that AI is going to bring. But I want to get your take on it. So oil.
Okay, so remember we were talking about ExxonMobil. When was it? Like 2 weeks ago.
Yeah.
So obviously ExxonMobil broke out in the last few days. So that trade is out of hand as well. So, I'm talking about something, and by the time I do it, is getting away from me. But the setup is ideal because oil is down in the 60 level and it has been there like all year. But if you try to think like in long term, you put on the TV and you see Sam Altman that looks like a 17-year-old with white hair and telling us that we need so much energy, and they're going to build nuclear reactions, and they're going to build nuclear reactors, and we need 10 of them. Yeah, those take a lot of time to put together. Okay. In the meantime, we're going to use whatever we have, and what we have is coal, oil, and natural gas. And there are not that many companies that provide that in the United States. Yeah. And in Europe, gets its natural gas from the US that they export. So thinking long term, they're not expensive. They pay like a 3% dividend. I know it's nothing spectacular, but yeah, my Ethereum gains are going into ExxonMobil for sure. And yeah, like long term, there's no scenario that we are switching from oil and gas to solar panels.
But the thing is, just like I think both go hand in hand.
I mean, have you seen Trump's speech yesterday? He was shitting on.
No, he shits on wind. Okay, listen very carefully. He says all renewables are shit because wind is killing the eagles, and then freaking it's all about the eagle, and the whales. Yeah. But I think it's like he hates wind.
He hates the solar as well because he occupies a lot of land. And
yes,
Germany,
but also
Germany. I mean, Germany spent like $1 trillion to get everything with solar panels, and they can't get enough energy.
Yeah, but the thing is like that's. But the nice thing about solar is that you use it while you can. You make it easier on the grid, right? And then you just like whenever you don't need it, which is usually at night, it doesn't produce anything, and that's okay. But it's like an alternative. It's like a little bit of a boost. So for all of the AI. The thing is I heard this rumor, okay? And it's like I still haven't fully like I've only heard it once, and it was like a very interesting point. It was like we have enough energy, right? Which was like one person out of everybody was saying this. It's like we have enough energy.
We have energy in the ground.
No. The problem is we don't have the energy we need when we need it. So if the energy was spread out through the whole day, it would be fine. But because we get a surge of energy demand at peak hours during working hours, that's when we need the most energy, and that's why we need to build the grid in order to sustain those. So what do? if we can get the energy on the other side and get batteries, so that's why I'm paying a lot of attention to battery companies right now. It's because if we're able to grab that energy and store it and activate it and deploy it whenever we need to, is when we see the sort of benefit coming. So I'm paying very close attention to battery companies. It's like whoever has battery companies, throw them in the comments, pay me on Etoro. I want to know. And I want to do the analysis and I want to start like freaking like I want to have a conversation. Anybody knows about this? More than happy. Like my cousin is in, like he says, it's like right now, the biggest installations in the solar industry or renewable industry is batteries. It's not even solar anymore. It's batteries.
Okay, do you want? Okay, so let's just say this: the wind and the batteries and the solar come into play when everything is comfortable, when we have an abundance of of electricity and energy to power the AI. You know, when they come and telling you, don't say thank you and please to ChatGPT because it
Consumes too much
energy, then you know we don't have enough energy. Okay, and you need reliable. And you know, when push comes to shove, and Trump says, you know what, we need energy because we're competing with China, and I'm not going to depend on solar and wind. I think it comes later. Okay. The infrastructure is going to get built now, like slowly. But I mean, I'm not crazy bullish on renewables at the moment.
I like solar.
I have
the
Tesla
problem is
because they sell a cool product and not because of the renewable element of it.
The thing is, the big beautiful bill. If you build solar within your big beautiful bill, you can depreciate the value of the item. All of the energy you sell from the moment you start to the end, pure profit. It's all you just depreciate it. Is that okay? Depreciation. I don't play money. You don't have to pay taxes on the profits that you make from the energy that you sell to the grid. It makes solar panels profitable. They took away the solar benefit. They added it through just, I'm not building a solar company. I'm building an AI company that has solar panels that fits the grid. You know, it's like you just play around that stuff. It's beautiful. But okay, let me ask you. I have another point that I know I want to sort of touch up because it's coming up. Okay.
Yeah.
And I think I know the answer already. Government shutdowns. What is the trade there? What is the opportunity that comes up?
There's no trade.
There's always a trade. Market freaks out always.
No, there's
market freaks out.
Made. I mean, are we not getting this like twice a year?
Correct.
This is like a snowstorm. Like when I was in the US, they tell you a snowstorm is coming, and you go to the supermarket and everything is empty, and you buy like a box of water, and you go home and nothing happens. Okay, and you have like 2 boxes of water you have to drink in the next 3 weeks. The market doesn't go down. The market doesn't go up.
But it does a little.
Ever?
No, it does. It does a little bit.
Never.
A little bit.
When was the last one? I don't
do nothing.
When was it? Like 6 months ago? Like a year?
Yeah. When Trump came into power, and then
there you go.
It a couple of weeks.
There you go. I remember one time Trump closed the government for 23 days.
Oh, I remember that.
Market freaks out.
Okay, so how many government shutdowns in the last 20 years? I think I did a post about this. It's like 2 or 3 a year, like on average. So it's nothing. It's just for the media something to talk about.
So if the market comes down, buy some more. Is what I'm hearing. And if it doesn't, and if nothing happens, just stay the same.
Yes.
Yes. Okay. I wanted that clip. Wanted that clip.
It's not a major risk whatsoever.
Yeah.
I still think when we're talking about that specifically or any event, sometimes it's really for market makers to really have an excuse to move price. So yeah, could be a nothing burger, but sometimes it just is. It just is.
Like I'm not losing any sleep over this. Like
me neither.
The
market's gonna freak out for a couple of days because everybody's gonna be like, "Oh my God, are we gonna get the bill? Yes, no. Oh, we finally passed the bill. Oh, the savior. Oh my God!" And then it's like,
let's assume that the shutdown happens. Most of the times they talk about it, and then at the 25th hour they reach a resolution. Let's say it happens, okay, and the government shuts down for a day or two, and then Trump's get on TV and says, I'm willing to keep the government closed for 6 months. Okay, we're gonna get the volatility on that day. But that's it. I'm not making any major moves within the portfolio because of it.
Okay. No, it's good. Like I just want to, because it's gonna happen. They're gonna talk about the government shutdown. It's coming up in the next couple of days, and I just wanted this clip to share with everybody on Etoro and all the socials to make sure that nobody be freaking out about it. I want to
freak out.
I see in the comment section. I don't think it's related. Someone said short S&P.
Yeah. When do we short it?
When are we going to do it? When are we? I want to short gold, but not now. But
what do you want to short?
Gold. At some point.
I hate gold.
The short.
Because everybody's like, oh no, gold is a safety haven, and I'm like, look at the S&P 500 and look at gold. It's the same. It's a risk asset. It's a risk asset. But yeah.
unless you have it in your house, like in coins.
Yeah, and then let's say then you can go around, like the world ends and you can pay people with gold coins. Yeah.
Yes.
Yeah.
But you be buying a gold ETF, and then all of a sudden the world collapses, and they're gonna be like, let me give you your gold. And the guy is sitting in the vault with an AK-47, just waiting. Yeah, I'm gonna give you the gold.
You know that the gold ETFs are like all the gold depositories are in London. So if you are in Cyprus or in Asia, good luck getting your gold from
His Majesty the King.
Yes, but if you live by the border in Germany or France or whatever, and you have gold in your house, gold coins in your house, and something happens, you can walk to Switzerland.
Yeah,
and that's a different way to play things. You know, a lot of our viewers are from those countries around, so they're looking at their options.
Nice. Okay. Anything else? Yo, quick comment. And I want to get your thoughts on this. And Dimitris, I want to put you on this. Okay, NVIDIA. This is an NVIDIA problem. Okay, yeah. And NVIDIA has been having like chinks in the armor, you know, and one of them that came up was the CoreWeave and NVIDIA deal that they have, which is like NVIDIA sells chips to CoreWeave.
Yeah,
but CoreWeave has a clause that if they're not able to sell the compute, they're going to sell it back to NVIDIA, and NVIDIA has to pay for the computing power. I want you to dig deeper with me on this.
Okay.
I want you to get deeper on me, because it's like, it's happening a lot. It's happening with
with Oracle as well. Yeah. Yes. Okay. So I don't know too much. I haven't looked too much into it, but I know.
That's why I want to leave it there. You know what I mean?
I know what you're referring to, and it's not a good look, because it looks to me that they've been recycled the money just so they can make the announcements of big investment. But okay, so I have $100. I give it to Mimi. She spends it. She spends it on you. Then you have $100. Then you spend it on me. And then we keep announcing the $100 spending like every other day, pretending that we all have the $100. But
and then when we realize, it's like, what happened to the $1 million that we're supposed to have? And it's
So it's what it is. It's what it is. Okay, but you have to ask yourself, if you're an investor, is this like useful, or are they just trying to keep the headlines going? Like, because I'm assuming Trump, he's like on a first name basis with all these people.
All of them. Like I think that's one. That's
I think he calls Jensen like twice a week. Okay, and he's asking him probably, are you planning to invest into that? Or, I mean, is that what they're trying to do? I mean, I don't think so. I'm just kidding here. I'm just speculating. But it's not a good look the way it's been presented. That they've been turning the money around. Just
when you start getting into the details, it's like, if you love something, don't figure out how it's made. So I want to leave it out there. It's a future episode that will be happening.
Okay.
Thank you everybody so much for watching. I appreciate you all. Not that I want to call you, Dimitris. I just have to go. I have an appointment. I have an appointment at 9. I have to be there. Otherwise I get in trouble. I get in trouble.
It's my fault. It's my fault. I hijacked.
No. You're good. You're good. We touch on everything. We're gonna have an episode tomorrow with Mimi and Timothy and myself. We're gonna talk about crypto. So make sure you hit that like, subscribe, Don't forget to leave any comments. We'll be more than happy to answer you guys. Thanks so much for watching, and peace out, everybody.
Thank you.
Whew, nice. Okay, end the stream. Bang. And
Okay,
then
and now
stop.